The price of gold is going to double if this happens. How you doing, everybody? Welcome to Empire Precious Metals. Thank you so much for watching. If you're new to the channel, make sure you blast that subscribe button, get the bell notification clicked. That way you get updated with any new content. If you found this video, that is because you are paying attention to the current financial looming crisis of bank closures. Now, the issue with these bank closures is that it's causing a lot of panic within the financial markets, and a lot of people are very afraid as to what's going to happen to their money if more bank closures continue. Now, in the last 2 weeks, we have seen the price of gold jump on March 7th from $1,813 to hitting intraday trading of $2,000 most recently, March 22nd, March 23rd. And we're seeing gold right now sitting in the high 1900s. Now, just to give you some context here, SVB closed its doors on March 10th, and then on March 12th, Signature Bank closed. So now we can see that there's a direct correlation of financial panic when we have the price of gold sitting at $1,813, skyrocketing upwards to just over $2,000 in intraday trading just a couple of days ago, right after a few banks have closed their doors. Now, I'm not saying that there's anything like the Great Recession that is looming. I'm not saying that we are in some sort of financial crisis. However, what I do want to do is revisit some numbers from the Great Recession. Now, we all know that the Great Recession is marked from 2007 to 2009. I want to show you some of the bank closures according to the FDIC website in that time period. Take a look at this. In 2007, we saw 3 bank closures, okay? 2008, we saw 25 bank closures. 2009, we saw 140 bank closures. 2010, 157. 2011, we saw 92. 2012, we saw 51, and that number continues to taper off. As I said just a couple moments ago, the Great Recession occurred from 2007 to 2009. So let's take a look at what the gold price was in 2007. Gold was sitting at $803 in December of 2007. At the end of the Great Recession of 2011, we see gold sitting at $1,825, which represents a 127% price increase. And so this is showing you a direct correlation when there is financial panic and uncertainty in financial markets, like bank closures of that magnitude, we're talking hundreds each year, then we can see that the price of gold continues to increase. So now what we are seeing in just these last couple of weeks alone, a few banks closed their doors, and we are seeing a price increase of gold around 9.5%. Again, like I said, we saw gold sitting at the low 1800s at the beginning of this month, and now we're close to the end of March, and we are seeing gold sitting in the high 1900s. So what that means to you is if you are not already purchasing gold, I'm not telling you to go out there and purchase a huge amount of gold. That's not what I'm saying. I've always said on this channel that what you should be doing is buying gold and silver slowly and steadily, right? Slow and steady wins the race. I continue to purchase gold whenever I have the opportunity. You have to look at this as another form of savings. It's not a get-rich-quick type of mechanism. You're not looking to buy gold and not watch the spot price soar so that way you can cash out. That's not what the purpose of stacking is, okay? Stacking silver and gold is a form of insurance, if you will. It's a type of savings. It's like a savings account. So my opinion is that you should have money getting set aside every month in your normal savings account, but maybe take an allocation of that. 20% of what you're normally putting aside, start putting it towards precious metals. Now, again, we're only looking at a few bank closures in comparison to what we saw in the Great Recession, which is vastly different, right? Hundreds of bank closures, very, very different scenario. But it should definitely be a little bit of a wake-up call to those of you that either aren't stacking silver and gold, or you've been on the fence about stacking silver and gold, or you have been stacking silver and gold, just not enough. So how much should you be putting into your precious metals allocation each month? Again, this is something that is entirely up to you. You have to basically do what makes the most sense for your budget. But in my opinion, you want to be doing at least 10-15% every single month. And then that way you can kind of rest your head easier at night. God forbid there's more bank closures and it sends your retirement plans in a downward spiral. You know that you have some physical hard assets that can hedge against any sort of financial calamity, such as another Great Recession. Now, how much I'm putting into gold and silver each month, I'm probably not the norm. I do have my portfolio in a wide range of investment vehicles, right? I have my 401k, I have a 403b, I have my mutual funds, I've got real estate, I do have cash on hand. I also have different forms of life insurance, and then I have my day trading account as well. And then I have silver and gold. I did dabble a little bit into crypto. I made my money and then I pulled out of there. I just kind of, I played around with it. I did what I could. I made my money, and then I said, all right, that's it, I'm done. But again, silver and gold, in my opinion, are the tried and true way of stockpiling your wealth in a hard, physical, tangible asset that really does hedge against inflation. And precious metals are a safe haven in times of economic uncertainty. So you definitely want to be putting your money aside into some silver and gold. I'm curious as to what you are putting your money into. Are you putting your money heavily into silver, heavily into gold, or are you kind of just sitting on cash and waiting to see what happens next? Let me know in the comments down below. And guys, again, do not wait. This should be a wake-up call to all of you that are watching this video. Definitely put your money into some silver and gold. You will feel better. Trust me on this one. Anyway, I'll see you guys on the next one.